Bloomberg Audio Studios.
Podcasts, radio, news.
This is the Bloomberg Surveillance Podcast. I'm Tom Keene, along with Paul Sweeney. Join us each day for insight from the best in economics, finance, investment, and international relations. You can also watch the show live on YouTube. Visit the Bloomberg Podcast channel on YouTube to see the show weekday mornings from 7 to 10 a.m. Eastern from our global headquarters in New York City. Subscribe to the podcast on Apple, Spotify, or anywhere else you listen, and always on Bloomberg Radio, the Bloomberg Terminal, and the Bloomberg Business app. Margie Patel has been patient, and we welcome her today because with the news flow, we are so far off the core mission, which is use of cash of this capitalistic system. She is definitive at use of cash. Margie, what are dividends and dividend growth going to do to the end of the year?
Well, I think you're right to continue to chug along, and I think earnings will be at, say, an 8 to 10% annualized rate for the rest of the year, pretty much like the first half of the year. And it's interesting, companies have been raising their dividends in the second quarter, year over year. Dividends are up about 6.5%. So that says companies have cash that they can deploy to shareholders.
Hey, Margie, I've been looking at the fixed income space here, and I look at the INGO function on the Bloomberg terminal. That gives me the Bloomberg index browser for all the fixed income indexes around the world. You know, some of the best performance has been in U.S. high-yield corporate debt. What's going on in the high-yield market?
Well, the fundamentals have really never been greater. Bankruptcies are very low, even though the Fed has raised rates a lot, say 4% or less than 4%. And also I'd say, if anything, there's actually scarcity of high yield bonds. This year supply's up a lot. However, 3/4 of the issuance is to refinance other debt. So net, there really isn't that much out for people to reinvest their coupons or to put new cash in.
So, I mean, I guess the reason it surprised me that high yield has done so well is because there's been so much talk over the last year or maybe 2 years of just about an impending recession. Of course, we haven't seen it, but despite that backdrop, high yield has done, I guess, fairly well. Are there any sectors that are leading the way?
No, I would say high yield realistically is for somebody who's interested in income. The year to date, the returns in the high yield market is, say, 2 to 3% total return, including what you've earned in the coupon income. Modest compared to equities, but corporate bonds in general, high yield and investment grade, have outperformed treasuries. For a yield-oriented investor, they're not bad.
Margie, with immense respect, I ask you this question. I had a mini tantrum yesterday. Lisa had to hold my hand and medicate me. And Margie, it was over the institutional Wall Street bond people rationalizing away the losses our listeners and viewers have taken in bonds. Over the last 3 years, I believe it's been price down, yield up. How do those people recover?
Well, I think they have to change their focus. And it's interesting, when the Fed started to raise rates, the conventional wisdom was go to quality. That would be treasuries, better quality investment grade. And that was actually the wrong sectors to be in. The best sector performance since 22 has been high yield bonds. So people were just looking at the conventional rule book that said go up in quality. It was wrong. Just like on equities, get defensive in value stocks, wrong. I think they should really look at allocating more money into stocks or into better quality high yield bonds, because they offer a little bit of yield, 2% more, but they should be safe.
Margie, one final question. Can the Red Sox catch the Orioles?
That's a tough one for me, Tom.
Okay, thank you. Margie Patel, somewhere in the vicinity of Fenway Park in Boston. Margie Patel, thank you so much. She is with Allspring, and we can't do it right now, but we'll explain the importance of Margie Patel, a voice here on clipping coupons and finding total return. It's a really important conversation, and the jewel of this, as it continues, you will see Gene Munster and Dan Ives together for an hour, a spectacular hour on this moment we're living. I don't bundle the stocks all together. Sweeney does, and you demand we start with Tesla.
Absolutely. Dan Ives joins us here, Managing Director and Senior Equity Analyst at Wedbush Securities. Potentially the worst dressed man on Wall Street. We'll leave that up to the II poll there. Dan, I want to start with Tesla here, because that stock for a while just could not find a bid. And there's a million reasons why, whether it's fundamentals, people just aren't going to be buying EVs as much as we thought, or is it just Elon Musk? Since kind of late April, that stock's up 60% here, only down about 7% year to date. Give us the latest view on Tesla.
Look, they went through a dark period. I mean, we saw demand soften in China and globally for EVs. Boom came off the rose. They missed deliveries in 1Q. But our whole call was adult in the room, Musk steps up, turns us around, cuts prices. Then the mojo returns. And that's what we saw yesterday. I mean, the 2Q deliveries handily beat Whisper and the Street. And Paul, I believe we're going to a historical period because Robotaxi Day, August 8th, we just raised price target to 300. I could argue FSD and autonomous. Tesla is the most undervalued.
FSD is
full self-driving.
Full self-driving.
Tesla is the most undervalued AI play in the market.
Everything you just said is about automobiles. If we can all agree Toyota's the machine of the world in automobiles, to be charitable, it's trading at 10 times earnings. How do you buy Tesla? Forget about the disasters of America when the best run machine is running at 10 times earnings.
Yeah, I think Tom brings up like probably the biggest debatable point in Tesla. I've always viewed Tesla as a disruptive tech company. Never viewed them as an auto company. And I think more and more the software piece, especially when it comes to FSD and autonomous, that is ultimately what's really going to distinguish them more and more going forward. The way that you get to evaluation, trillion, half, 2 trillion Tesla, it's not auto. It's that this is essentially an AI play. It's data driven, and the sum of the parts model starts to play out. That's why I believe this is marks a huge inflection point in the Tesla story. And I think August 8th, look, just like we talked about with Apple going to WWDC with Cook and the AI strategy, this will be a historical moment for the Tesla story.
So what is that event? Explain to us what that event is.
So they're going to basically introduce their autonomous and robotaxi fleet, which essentially is going to lead to, over the coming years, I believe 1 of every 5, 1 of every 6 ride shares at some point.
Which city is going to do what you're talking about? It's not congestion New York.
Look, I think next 3 to 5 years, autonomous is coming. Because in China, it's coming. FSD and autonomous is happening.
It's going to work in Kansas City.
It will work in Kansas City. I say, but put it this way, by the end of the decade, you will have a percent, 5, 10, 15% of what I'll call shared rides that will not have a driver.
Okay. I'm going to switch gears here. Coming out of the pandemic, Apple 60 to 220. You've been dead on this. Extrapolate out the new Apple. You go to 275. Hi, I was busting your chops. You can't come on till you go to 300. I want you to extrapolate out 5 years on some of these Mag 7s. People hate you, Dan, because you've been so damn right about this. Extrapolate out the new trend of Apple.
Yeah, and also G and I talk in that hour long, which will be tomorrow on Bloomberg Radio. G and I talk about this a lot in terms of Apple. Look, the reality is that it's all about install base. So when we look at Apple,
their ecosystem,
2.2 billion iOS devices, 1.5 billion iPhones, and of those, 270 million haven't upgraded in 4+ years in terms of, including Paul, who will probably be online for iPhone 16.
That's what I'm doing.
Now, when you look at Apple introducing Apple Intelligence, essentially the AI strategy, this is going to now be developers building hundreds and hundreds of apps on Apple's ecosystem, including the big players. Eventually Meta and others are going to have to come in as well. They will own, as what we talk about NVIDIA and Godfather of AI, owning enterprise AI, okay, in terms of AI revolution. The consumer AI revolution will go through Apple. And the important thing when it comes to numbers, I could argue now that 100 billion of services, when you trajectory it out, that could be an incremental 40 to 50 billion of services next 5-6 years.
We're going to talk serious here, folks. This is with Wedbush. And with Dan, I mean, Dan, you become a phenomenon, and it's an earned excellence. This morning, where Marko Kolvanovic at JP Morgan is pushed aside. You've earned this excellence. So let's talk CFA math right now. What's your run rate on revenue growth at Apple?
Look, my run rate is basically you're going from a 2-3% grower to what's going to be an 8 to 10%
higher single digit
top line grower, right? But because of the margins on services and what's happening,
which
on
is
the
like
software
85%,
side,
right?
Now you're going to actually have EBITDA cash flow growing double digits. So when you start to trajectory that out, you're basically going to have what I could say from a Cage perspective, the best sort of earnings growth potential that you've had in Apple going back to the last 10 years, which is, in my opinion, on some of the parts, when we talk about 275, 300 is our bull case.
What is your sum of the parts on Apple right now?
Some of the parts, 325 to 350 on a bull case, because I believe the services business, which I put a value of 1.4 to 1.5 trillion, could be worth, when we think about AI coming, $2 trillion.
So you have confidence their margins under the stress. Sweeney decides not to buy the new iPhone. I can't buy 6 new iPhones for the brats at home. You're saying the margins are persistent and could even grow?
And they're growing 100 bips a year just based on them producing.
Yeah, but you can't
cheaper.
go trees to the sky. When does the set of margins level out?
I believe we have 5 to 7 year run rate on margins. But just going back to the Sweeney example, Sweeney's playing golf down the shore. Everyone else, go back six months from now. Everyone has an iPhone 16, iPhone 15. He's like, oh, how do you do that? Oh, you have an iPhone 13. You can't do that on your iPhone.
That's the way Damien is. I mean,
I
know. You got to keep up with
But
Damien.
that's essentially what's going to happen.
iPhone 11 for correction there. Dan, so are you comfortable? Like, I think going into that recent event from Apple, concern in the marketplace was Apple was behind in the AI, zeitgeist. They just weren't there. Sure. Do you think they're there now, or they will get there?
They were late, but they don't have to be first.
Right.
They have to be the best. And when you have an install base like that, and that's what Cook and Cupertino knew, they need to bring OpenAI in, build their LLMs into iPhone 16. And I can tell you from all of our Asia trips, those iPhone numbers in Asia continue to uptick. Street's still not where I believe they're ultimately going to be. You put that together, we are essentially going into an AI-driven super cycle.
Okay, I want to ask you travel like crazy. You're doing all sorts of good things at Wedbush. Great. When you go out worldwide and talk to serious institutional people wearing gray suits and bow ties, do they feel they're under-owned in the Dan Ives world?
That's the reason people meet with me. Because ultimately, it's under-owned globally.
And they're scared stiff because you got a waiting. I mean, I look at Will Danoff at Contrafund or others. I guess, particularly with Berkshire Hathaway, they own some of these things like Apple, but that's just a few people, right?
Well, exactly, and that's why it's under-owned institutionally. I'd say retail, to some extent, has almost been ahead of institutions when it comes to the revolution. But in my opinion, the AI party, it's 9 p.m., and this party goes to 4 a.m. Now, there are going to be others, like Amazon's like, let me on the dance floor because I want to be part of the AI. Look what's happened to the valuation of Amazon, because AWS, that's going to be a key piece to monetization. That's why I believe a year from now, we're looking at $3-4 trillion market caps. NVIDIA, Apple, Microsoft. First one to get there is Apple.
Can you be sure when you leave that Michael Barr doesn't see you? Because I don't want Michael Barr getting any ideas.
Look,
I mean, those of you on Bloomberg 1130, thank God you're not on YouTube.
Yes, exactly.
Dan Ives, congratulations from the securities analysis standpoint of getting this right. Dan Ives, Gene Munster, an entire hour tonight, 6 p.m. and tomorrow, 5 a.m., 10 a.m., 3 p.m., and we're trying to figure out what to do with it on a podcast. For any of you studying for the CFA worldwide, trying to understand what Michael Mauboussin talks about of capital allocation and capital efficiency, this is the hour of the summer. Bloomberg Daybreak, Dan Ives, Gene Munster, look for that. An important conversation away from Paris, away from London, in Kyiv. Our Annmarie Hordern with Mr. Zelenskiy.
So let us imagine that the winner might be Trump in November, and he knows how to end the war. He has a plan. Me, as the president of a country at war, not a theoretical person, but a real-life person, I would like to be prepared. We are 40 millions, we're a big country, and we really depend on the aid from the world, and we depend on the aid and the position and the stance of the US. So I would like to understand, what would it mean to finish war fast? Tomorrow, do we want the war to be over tomorrow? The war didn't to start. It was Putin who started it. But I hope you agree that it will be fair. If Trump knows how to end this war, he should tell us today. Because if there are risks to Ukraine's independence, if there are risks that we will lose the statehood, we want to be prepared for this. We want to understand whether in November we will have the powerful support of the US or we'll be all alone.
Mr. Zelenskiy, and through the months and the quarters and the years, we've seen a different Zelenskiy, it seems, as he adapts to a war. In conversation in Kyiv with our Annmarie Hordern, we are thrilled to have Annmarie with us, and particularly the symbolism of being in Kyiv as we go to the 4th of July. There's quite a delay, so we're going to keep these very discreet questions and answers to Annmarie. Annmarie, thank you for being with us. Thank you for your reporting from Kyiv. How is this Zelenskiy different than the Zelenskiy of February of a few years ago?
This is a hardened man who was once a comedian, who now is still a wartime president, who's dealing with not just continuing jetting around the world to make sure that he has allies and partners supporting him, which you just heard there, you know, this angst potentially that it's going to be a Donald Trump 2.0, and how does he prepare to that? He told me he's potentially ready to sit down with him if Trump has a plan, like he insinuated he did before during the debate. He wants to see it now because he says the consequences are just existential for Ukraine. And this is an individual, of course, who's still dealing with issues at home. They just changed the mobilization laws, so if you're younger, there's more potential that you are going to be drafted. They have a lot of weapons coming into the country, although he made the point these weapons have been delayed. That is why many in the military analysts would use the word deadlock or stalemate. He does not like that word. But they also need to make sure they have the men to use those weapons. So he has a lot of challenging times ahead of him at home. And while all this is going on, there's seismic shifts in politics in Europe and in the United States.
Annmarie, you over the years have basically been our correspondent on corruption, whether it's Russia or across Europe and, of course, Ukraine as well. The latest news is NATO is more than lukewarm about the continued corruption in Ukraine. From your perspective of years, what is the level of corruption in Ukraine, and what can Zelenskiy do about it?
Well, Zelenskiy has been working towards this, and he understands this is a condition and has been a condition for a lot of items that the U.S. went ahead with. I'm thinking the bilateral security agreement, and also right now they are discussing part of that $61 billion, more than $7 billion is a loan tied to Treasury, and there are discussions right now about what corruption reforms, what changes in what potential corruption there's going on in the country that they can make to unlock that $7 billion. So this has not gone unnoticed. A lot of issues tend to happen in customs with the Customs Department. But if you talk to Ukrainians, one of the issues is they are under martial law. Right now, their only goal is to survive and defeat Putin. Many would say, let's deal with reforms later. But it's a critical issue. Partners bring it up. And it's hard to honestly think that there's no corruption in the government when their head of the Anti-Corruption Bureau was actually, allegedly, in Ukrainian press, leaking to individuals that were corrupt and that they were going to bring before the Bureau. So this is an issue. But I would say right now, under martial law, Zelenskiy understands it. They want to reform, but he has to do two things at once. Reform, at the same time, try to win a war.
Annmarie, in your discussions with President Zelensky, did he offer any roadmap for any possible resolution to this war in any reasonable time frame?
Well, what he's saying is that everyone, including Viktor Orban, who was here yesterday, who's been a hurdle for Zelensky in the European Union, he came here. It's the first time he's been to Ukraine since the outbreak of the war. He now has a little bit more power because he's holding the rotating EU presidency. He called for a ceasefire, and Zelensky says yes, but a ceasefire, what does that entail? What is the future steps? Because what they do not want to do is cede any territory to Russia. When I asked more about who could potentially be a mediator in this, it's been floated. You could have a Mohammed bin Zayed or Mohammed bin Salman, someone in the Gulf that has been in the past the links between, say, prisoner swaps between the United States and Russia, a third party that has credibility in both Zelensky and Putin's eyes. But Zelensky said, for real war to end and credibility for a third party, it needs to be the United States and China putting their differences aside and hashing this out.
Annmarie Hordern, thank you so much for your work in Kyiv today. We hope, Annmarie Hordern, by the time you get back, the Yankees maybe can win 2 in a row. Just possibly. We'll have to see on that. Annmarie Hordern in conversation with Mr. Zelensky, important given the politics in New York. We got a huge newspaper segment. Let's get right to it.
Yeah.
Lisa, what do you have?
Well, we were just talking about New Jersey, so let's continue the conversation. Global warming showing effects, but a new study says New Jersey heating up faster than any other state in the Northeast. Really? Yes. Okay, so this is a study from Climate Central. They say average annual temperatures nationwide increased by about 2.5 degrees since 1970, but annual temperatures in New Jersey increased by about 3.5 degrees. So it makes this the third fastest warming state in the country. It's just behind Delaware and Alaska. Alaska came in at number 1.
Okay, I didn't see that. All I know is,
is this because it's asphalted from sea to
shining sea? I think so. But whenever in the metro New York City area, folks, whenever we have these heat waves, the hottest temperature in the metro New York area is always Newark. Yes, and I don't know why that is, but
it's that whole heat island effect.
I guess.
I mean, it's a different things, a warming ocean, overdevelopment, because Newark is very overdeveloped. But you're saying that the water temperatures are cold. Cold, and they better warm up quick.
Have you seen a June report yet? I haven't seen a summary of June in our area or, frankly, any other area.
No.
It's too early, I think.
No.
Next,
right.
What do you got?
Okay, we've heard about students using AI for their papers, for different things in schools.
I would never have done that.
Now,
this portion of Bloomberg Surveillance brought to you by Cliff Notes.
Yes.
Use them and use them often.
I used to use them. Okay. But now the teachers are using AI to grade the students' papers. But not everyone's happy about it. And here's the problem. So the bots generate this numeric score and they offer up some critiques. So it's up to the teacher whether they want to use these critiques or develop their own, kind of just use that as a guide. They always tell the parents and students when they use this program, but the problem is they're saying it's making their lives easier. It's helping the students be better writers. But then you have the critics who say, hey, you know what? I can't trust this new technology. My kids are dependent on these grades to go to good college. So it's this back and forth and this battle over whether the teachers should use AI to grade papers or should not.
Well, here's interesting. All right, from the story, used properly, teachers say, AI helpers can provide consistency and remove bias from assessments of students' work, although not everyone trusts AI to do that.
I'm at a world-famous prep school, sitting in the office with the head of the mathematics department, who's acclaimed within education, and she was in tears because they kept giving out B's and C's. And all the other schools were giving out A's, great inflation and all that. And it demonstrably affected where those kids went to school because they were like old school, like Paul and I grew up with. You got a quality C. Full disclosure, folks, it was a miracle I got through school. I mean, and we can't say it on radio, but there I was. I'm sorry, I have real trouble with this. I just go to the Cliff Notes. I mean, I lived off them.
Exactly. The yellow and black book.
Yes.
Thank you. Oh, Lisa.
For Shakespeare.
For Shakespeare.
For Shakespeare, because I couldn't read all the notes at the bottom. I mean.
Oh, come on. William Faulkner. James Joyce. James Joyce actually read the whole Cliff Notes. Next.
Okay. Home affordability in the U.S. sinking to the lowest point since 2007. Okay, this is from Adam. The cost of a typical home, you think mortgage, insurance, taxes, now consume just over 35% of the average wage. Different things. You have growth in expenses, higher mortgage rates. They've outpaced those income gains. So they're saying the shortage of listings pushed those home prices to a median of about $360,000. So you're talking about home affordability and how it's so much more difficult now. The biggest declines in affordability were in the West and in the Northeast. So places like California, then you have in New York, Brooklyn, Nassau County. So those are some of the markets.
But we're living with this. I mean, is there any theory that this goes away?
I think interest rates just have to come down. And so the question I have for the real estate people is, what's the rate, the interest rate, the mortgage rate that'll start clearing the market?
The optimal rate.
Yeah. Is it 6%? Is it 5%? Where sellers will say, okay, I'll put my house on the market because I'm willing to take a new mortgage for a new property and get this whole thing going. So I don't know.
Next.
Yeah, and then you have the Mortgage Bankers Association, 7.03. That's the 30-year.
Okay, that's still too high.
You're still doing all right there. Okay, we talked about this yesterday. Kevin Costner's movie Horizon,
it's working out.
And how much money he needs to gain from this in order to get his money back. Okay, so this is from Business Insider. It only pulled in $11 million its opening weekend. So he was really behind this. He mortgaged his property in Santa Barbara, invested $38 million of his own money. Other undisclosed financial backers also covering the marketing. Variety says that estimates to about $30 million. So what they did is they crunched the numbers, and they said for every $10 million Horizon makes at the box office, Costner and his investors see about $4.6 million back because Warner Brothers is only taking about 8% of that. That means he has to recoup that $30 million that he invested in marketing. It has to make more than $65 million domestically, but he's only made 11, so he's kind of got.
But here's the thing:
a long way
this
to
is
go.
the underbelly of theatrical releases, pre-sales around the globe. So what you do is you go to Cannes, France, which Tom knows exclusively. He gets his rosé, but people are actually working there, and Costner goes there and he sells the rights to every single country, region around the world, and we don't know what that number was. So that number all goes into his pocket and his investors' pockets, and that might cover.
Or if he goes to streaming too, that could. If it gets a good streaming.
I got to move on to another thing, but has this thing had good reviews? I mean, are the critics?
I think it's okay. I think it's okay,
but
it's 3 hours. Right.
Is it like Dancing with Wolves Redux, or
I mean,
maybe? But I like a good Western. We don't get good Westerns very often. So
the Westerns
I'm going to give this one a chance.
But how does American Westerns
Paul,
play global?
we got
historically they've done pretty well.
We got a huge response yesterday.
Yep.
To the fact Lisa has 3 freezers.
I know.
Really?
I looked at what the electricity bill is. So you're popping $210 a year just for the base electricity.
She's got a big solar panel.
But see, I just blame it on the kids for leaving the lights on. So.
And one guy said to me, do you have like spanking new energy efficient freezers? Or are these from just, these Frigidaires from the 50s?
They're not. And it's probably, I wonder if I make up for the difference in the money that I save at Costco.
This is the Bloomberg Surveillance Podcast, bringing you the best in economics, finance, investment, and international relations. You can also watch the show live on YouTube. Visit the Bloomberg Podcast channel on YouTube to see the show weekday mornings from 7 to 10 a.m. Eastern from our global headquarters in New York City. Subscribe to the podcast on Apple, Spotify, or anywhere else you listen, and always on Bloomberg Radio, the Bloomberg Terminal, and the Bloomberg Business app.